Ever stare at your bank account wondering how you'll bridge the gap between expenses and income? It happens to the best of us, especially small business owners. You know, the lifeblood of our communities, the ones hustling and building something from the ground up. Maybe you need to invest in inventory, cover a seasonal dip in sales, or finally fix that leaky roof, because customers don't exactly flock to stores with dripping ceilings. Whatever the reason, a little extra cash could be the difference between keeping your dream afloat and, well, not. This is where financial tools for small businesses come in. And today, we're diving deep into a question many of you have asked: does Square offer cash advances? Short answer: Square doesn't exactly offer traditional cash advances. But hold on, because there's a plot twist. They have something very similar called Square Funding. Let's unpack what that means and see if it's the right fit for your business. Cash advance versus Square Funding, understanding the difference. A regular cash advance is like a short-term loan. You get a lump sum up front, then repay it with interest over a set period. Think of it like a bridge loan, helping you get across a financial hurdle. Square Funding, on the other hand, is a merchant cash advance, MCA. Here's the key difference. Instead of a fixed loan amount and interest rate, Square Funding advances you money based on your processing history. Then, they take a percentage of your future sales to recoup the advance. There are pros and cons to both approaches. Cash advances typically come with a fixed repayment schedule, which can be helpful for budgeting. However, interest rates can be high, making the total cost of borrowing more expensive. Square Funding, on the other hand, doesn't have fixed interest rates or monthly payments. Instead, the repayment amount fluctuates with your sales. This can be attractive because during slow periods, you'll repay less. But the downside is the total cost can be difficult to predict up front. Is Square Funding right for you? So, how do you decide if Square Funding is the right financial tool for your business? Here are some things to consider. Your sales history. Square Funding works best for businesses with consistent or growing sales processed through Square. The higher your sales volume, the faster you'll repay the advance. Your budget. Since repayments fluctuate with sales, Square Funding might not be ideal if you need a predictable cash flow for fixed expenses like rent or payroll. The urgency of your needs. Square Funding can be a quick and easy way to access cash, but it's not necessarily the cheapest option. Consider the urgency of your financial needs when weighing the pros and cons. Exploring alternatives. Before committing to Square Funding, explore other financing options. Consider small business loans. Traditional banks and online lenders offer loans with fixed interest rates and repayment terms. Lines of credit. A line of credit gives you access to a pool of money you can draw from as needed, similar to a credit card. Business grants. Government agencies and nonprofit organizations sometimes offer grants to small businesses, particularly those in specific industries. Square Funding can be a helpful tool for businesses processing payments through Square and needing a quick cash injection. However, it's crucial to understand how it works and compare it with other financing options before you dive in. Remember, do your research, consider your specific needs, and choose the financial tool that best positions your business for success. With that said, thanks for watching, and until next time, happy hustling.